Good morning, this is Bob Iaccino, Chief Market Strategist and Head of Research for TrendyTrade. Well, there's a lot going on in this coming week, some of it playing off of last week, some of it brand new. Let's start by talking about crude oil, which is up over 1% as I speak right now. We've got the OPEC and non-OPEC meeting that's been going on since the start of the weekend. And so far, no change in production. There's just been a lot of scolding back and forth between the non-OPEC members and the OPEC members, especially Saudi Arabian Energy Minister Khalid Al-Fahil. He did launch with one headline, however, that kind of pushed the crude oil up about the 1% that we're seeing right now. And that was the headline that Saudi Arabia is expecting a drastic cut in exports for August. They didn't really mention any change in production. As a matter of fact, they said they don't expect any. They also said that unilaterally, they will not sustain oil prices or balance the market. But the export cuts kind of matters because why do we really care about crude oil that's being produced? We only care about crude oil that's going to market. So if they're going to cut it but to 6.6 million barrels a day in August, that's about 1 million barrels lower than they currently have been doing. And that's off the back of a consultancy report we saw on Friday boasting much more production out of Saudi Arabia, not just the OPEC production cut cheaters. We also want to focus quite a bit on currencies. Dollar index is recovering, but not much, still below 94. And the euro is still above that 116 level, although it is falling a little bit. Now, I mentioned in my CME commentary on Friday that I'd be watching the PMI figures that came out over the weekend and last night, and those PMI figures did disappoint. We got 55.8 in the European composite number, or the EU composite number rather, which was lower than expected and lower than last, so that caused a little bit of a push in the euro, although we did get in the industrial PMI for France the highest level in 6.5 years, but that's a small industrial economy, so it's not really going to matter that much. So the euro's a little bit weaker and the dollar overall is stronger, but negligibly. It's not really something that you would even look at as strength. The DAX is lower, over 1.5% right now, as much on that data as it is on the bombshell story in Der Spiegel, the German newspaper, talking about collusion between the big three automakers, and that would be Volkswagen, BMW and Mercedes in Germany colluding to avoid emissions penalties and emission situations, and that's a violation of antitrust laws. So that hit the auto sector very hard. The auto sector is the jewel of the German economy, and it's getting the DAX crushed right now, down over 1.5% as I speak. Back to the dollar really quick, there is something interesting in the CFTC Commitment of Traders report. Speculative shorts in the dollar are at the highest level since 2013. So all of that can kind of combine to a potential spike in the dollar if those shorts start to cover and if the euro starts to go away from the 2017 highs that we posted last week. We've also got a Fed meeting this week. It's a two-day meeting. The announcement won't matter. There's not expected to be any change, and there's no press conference after this particular meeting, so we're not expecting to get any sort of market moving news out of that at all. Now, moving into U.S. equities, we're a little bit lower right now, again, right at that level that I call unchanged. Not a lot of activity going on behind me in the options, nothing really going on in the electronic markets, again, down lower to the point where I'd look at it as unchanged. As of right now, 77% of companies that have reported in the S&P 500 are above the 5-year average in terms of how many have beat on sales. 73% are above the 5-year average in EPS beats versus estimates. In aggregate, sales are beating by 1.3% when you combine all the companies. That's also above the 5-year average. However, only 19% of the S&P 500 companies have reported as of now. So that's really a very small data set. We don't want to make sweeping conclusions from limited data. So this is a very heavy earnings week. We've got 180 S&P companies reporting. That's almost 40% of the S&P. We've got 13 Dow components reporting. And we've got huge names reporting that really will move the market. Names like Amazon, Google, Facebook, General Motors, Ford, Twitter, PepsiCo is reporting. So we've got a diverse cross-section. Starbucks is reporting. A diverse cross-section of industries with a heavy weight on tech, which if they continue to beat and continue to achieve the numbers that I mentioned earlier with only 19% reporting, we should get a fairly good rally out of the equities here in the U.S. This is Bob Iaccino talking to you about the general markets for TrendyTrade.com, TrendyTrade Pro, and coming soon, TrendyTrade Hedge.